JSE may remain flat today, but the rand seems to be rebounding. The JSE fell for the third straight session on Thursday as investors mulled over poor economic data from China and the prospect of the Federal Reserve keeping interest rates higher for longer. Matete Thulare from Rand Merchant Bank joins us now for a wrap of the latest market developments. Matete, very good morning to you. Thank you so much for your time. The rand seems to be trading much firmer today. Give us a wrap of the rand's performance this week.
Good morning, Mpho. I suppose the rand managing to claw back some of its losses from earlier in the week. I mean, we touched 1934 earlier this week. Overall, the rand is obviously trading in relatively tight ranges between 1912 and that 1934. That was, I think, between yesterday we saw 1912 and 1927 trading for the day, with flow really being dominated by sellers of dollars from the export side of the sector, but marginally better than expected local data yesterday, also helping the rand stronger on the day. As expected, the country's current account deficit also widened in line with all the forecasts. In Asia this morning, the dollar remains really strong and it is headed for its longest weekly winning streak in almost 9 years, which has obviously been spurred by the strong U.S. economic data. Now, the rand gets underway this morning at 1909 against the dollar. I think there's very little in the way of data that we're looking out for. So I think if anything, between 1890 and 1920, we will look for some consolidation as we close off the week.
Now, oil extended losses today, further receding from this week's 10-month highs. Knowing what we know about output cuts from Saudi Arabia and Russia, perhaps give us a forecast of those prices.
So look, the primary driver of oil, and it's shifted more from macro considerations, which is obviously the inflation data, the US dollar, and also global growth. It's now shifted to the underlying oil market fundamentals, which is the OPEC plus, the inventories, the supply-demand dynamics. The process of OPEC plus and all the output cuts that we've seen from April this year, along with the extensions to these cuts from other members such as Saudi Arabia, like you alluded to, I mean, in subsequent meetings, that has really bolstered oil prices with concerns around the supply-demand deficits in emerging markets. Now, OPEC is really demonstrating a really strong position in their oil markets. I mean, some data is already starting to suggest that OPEC has close to 40% of the oil market production. Now, furthermore, as a collective, they're also the largest holders of oil reserves globally. Now, Saudi Arabia has demonstrated that they can raise fuel prices and still attract buyers. I mean, the likes of the Far East, that has still been buying Middle East oil despite the price increases. So as much as a lot of people are talking about demand destruction, that has not happened. And already there's broader questions that really need to be asked globally. I mean, what comes to mind is, will OPEC plus start reversing their cuts post-December this year? Already it's a case of, will the US start reacting to these higher prices with some added supply to the market? Another question that you could ask is whether the Chinese stimulus will start to take a hold on the increase in the demand for oil. And also from an inflation perspective, with the potential increase in energy prices, how will that also affect the global central banks in terms of their outlook and view in terms of inflation going forward?
Yeah. South Africa's current account deficit widened to 160.7 billion rand in the second quarter from a downwardly revised 63.7 billion rand the prior period. I mean, how does that fare?
Yeah, look, I mean, already that is showing that we've posted a current account shortfall for a fifth straight quarter. Now, the deficit was largely driven by a bigger shortfall in the services income and current transfer account, where tourism income makes up a large part of this. Now, data from the Revenue Service and also Stats SA showed that there was an import and a surge in imports of machinery and equipment, mostly for electricity infrastructure. As we know, there's a lot of renewables projects that are ongoing, and already household and companies are investing in alternative energy sources because of the persistent load shedding that we've had. And as you know, Eskom has had poorly maintained and also the aging infrastructure that is not meeting demand already, and a slowdown in China, which is obviously our biggest trading partner, has also reduced the demand for our export, which is the commodities. So on the back of that, the deficit on the current account, obviously, as you said, that has widened to about 160 billion rand.
Transnet, Matete, says it may need to dispose of some of its assets to raise the 50 billion rand that's required to finance its rail infrastructure maintenance. What's happening in that space?
Quite an interesting one. I mean, obviously, it is the state's logistics company. I mean, they're saying they're looking to dispose some assets to raise about 50 billion that is needed to finance some of their rail infrastructure maintenance. Now, they have said that they're looking to spend about 85 billion rand over the next 5 years on infrastructure at Transnet Freight Rail, which is obviously the largest operating division within the whole logistics company. Now, the company is battling 130 billion debt pile, and already they are paying about 1 billion rand in interest on a monthly basis. Now, they're overstretched in terms of their ability to raise cash. Now, the proposal to dispose assets to raise the cash to fund the maintenance backlog is likely to feature in their turnaround plan that they're going to be presenting in the next couple of weeks. I mean, already knowing that they can't turn to National Treasury, obviously, as we know, that Treasury is not an option as the government is clamping down on spending. Already the biggest challenge facing Transnet is the collapse of the physical track and also the signaling infrastructure. Already Transnet says they underspending on maintenance by about, 2-3 billion rand a year. That is quite a significant amount, given the fact that the total underinvestment in maintenance over the last decade is about 30 billion rands.
Yeah, very well. Thank you so much for your time. Let's perhaps leave it there for now.